We called it. We knew the floor was holding at $18.68. And guess what? The stock hit $19.25 and bounced right back. The support model was validated with surgical precision. And now the question everyone in this community is asking, is BMNR finally ready to explode? Could we actually be sitting on the edge of a gamma squeeze that sends this stock to $26, $30, or even beyond? If you've been watching this channel, you already know I've been tracking this setup for weeks. Today on Smart Stock Sam, we are going deep. The Ethereum treasury, the institutional buying frenzy, the powder keg of short interest, and the exact price levels that could detonate this thing next week. Stay with me, because there is one hidden metric in their validator network that almost nobody in retail is talking about, and it changes everything. Before we get into what's coming, let us take an honest look at where we stand right now. The floor is holding. Despite all the volatility this past week, the weekly low of $19.25 held comfortably above our established technical bottom of $18.68. That tells us the big players have their limit orders sitting right there, ready to catch every dip. On the fundamental side, the thesis is not just intact, it is actually strengthening. The company is now projecting annualized revenue of $252 million, and they are doing all of this with a zero-debt balance sheet. Let that sink in. We are talking about a company sitting on $8 billion worth of assets with absolutely zero debt. That is practically unheard of in the crypto infrastructure space. The accumulation zone between $19.50 and $20.10 is confirmed, but brace yourself. Once we crack that $22 ceiling, the volatility is going to be extreme. Now, I know some of you are wondering, if the fundamentals are this strong, why did the $35 explosion target get delayed? We have to be honest about the scorecard. The $35 move has to be labeled delayed. But here is the part that matters. Our downside model worked almost perfectly. We called for an $18.68 bottom. The stock hit $19.25 and reversed. We identified the accumulation zone between $19.50 and $20.25, and the stock spent nearly the entire week oscillating right inside that range before closing Friday at $20.13. In this game, if you can model the downside risk with that level of accuracy, you can survive a delay on the upside. The double squeeze is not canceled. It is being compressed like a spring. So why the delay? There are two drag factors acting as an anchor on BMNR right now. First, a bear flag pattern broke down, creating a temporary wave of technical selling. Second, and this is the big one, BMNR is currently acting as a direct proxy for Ethereum with a beta of 0.52. Ethereum right now is struggling to reclaim the $2,000 psychological level, stuck in what many are calling a mini winter. That macro drag is the primary weight on the BMNR double squeeze. But here is what is fascinating. A massive divergence is beginning to form between the stock price and the actual value of the underlying treasury. And when you see just how enormous that treasury is, you will understand why this drag is almost certainly temporary. Let us talk about the heavyweight data. BMNR is officially the world's largest corporate holder of Ethereum. They hold 4.37 million ETH. That is 3.62% of the entire global supply. If Ethereum were a country, BMNR would be its central bank. The current valuation of those holdings alone sits at approximately $8.7 billion. This company is no longer just a miner. It is an infrastructure play on the entire Ethereum ecosystem. If you believe Ethereum has any kind of future, and the data strongly suggests it does, then this stock is essentially a leveraged bet on that future, wrapped inside the safety of a corporate structure. But having the Ethereum is only half the story. The real question is, how much are they actually generating from it? Right now, BMNR has staked 69% of its treasury, and that staking is already generating $176 million in annualized rewards. But here is where it gets really interesting. With the launch of their Maven validator network, the Made in America validator network, That revenue is projected to jump to $252 million in annualized cash flow by Q1 of 2026. This is pure high-margin revenue. They are not just sitting on the Ethereum, they are deploying it to build a domestic validator powerhouse, and Wall Street is waking up to it fast. When I say Wall Street is noticing, I am not talking about small regional analysts. I am talking about the biggest names in finance moving aggressively. Bank of America did not just nibble, they increased their stake by 1,668%. BlackRock, the largest asset manager on the planet, increased their position by 166%. And Morgan Stanley, they are now the single largest institutional holder with a position of 12.1 million shares. Think about what that means. While retail sentiment is sitting at rock bottom, the most sophisticated risk managers in the world are buying this dip. That is not noise, that is a signal. So what exactly are they seeing in the balance sheet? It comes down to asymmetric upside. On one side of the scale, you have the protection of a zero-debt balance sheet in a high-interest rate environment. That alone is a superpower. On the other side, you have the moonshots. BMNR holds a $200 million stake in Beast Industries, the Mr. Beast ecosystem, plus 193 Bitcoin as a secondary reserve. Your downside is protected by debt-free hard assets. Your upside is powered by some of the most high-profile venture bets in the market right now. Heads, you win big. Tails, you do not lose much. And now we get to the most shocking number in this entire analysis, the valuation gap. The peer average in blockchain infrastructure trades at 13 times book value. BMNR is currently trading at 0.8 times book. You are literally buying their Ethereum treasury at a 20% discount and getting the entire mining operation, the Maven network, the Bitcoin, and the Mr. Beast stake essentially for free. Market inefficiencies like this do not last forever. Eventually, the math catches up. That is exactly why Wall Street price targets look so outlandish to the average trader. The Analyst consensus target is $48.67, representing a 140% upside from $20.13. B. Riley has a $60 target, and Tom Lee's supercycle model suggests triple digits if Ethereum enters a true bull run. The gap between current price and analyst reality is a chasm, and chasms close, usually with a violent, fast move to the upside. So, what is the match that lights this powder keg? Look at the open interest for the February 27th expiration. There are 6,068 contracts sitting at the $22 strike, and another 5,471 contracts at the $30 strike. If BMNR breaks above $22, market makers who sold those calls are forced to buy millions of shares to hedge their exposure. That forced buying creates a feedback loop, a gamma squeeze, that could catapult the price to $30 and beyond in a matter of hours. Could that happen before Friday? The shorts are about to find out. Here is the tactical setup for the week of February 23rd through 27th. The ideal entry remains in the green zone between $19.50 and $20.10. Continue accumulating here. Primary support is this week's low at $19.25. The critical invalidation level, the point where the thesis breaks, is a daily close below $18.68. On the upside, we need to reclaim $21 for a trend reversal. Heavy resistance sits at $23.35, where a dense cluster of exponential moving averages is stacked up. Break that level, and the ceiling is essentially gone. Two scenarios for next week. Scenario 1, the bullish breakout. We clear $22, the gamma squeeze triggers, and we run straight to the $26 initial target. Scenario 2, the conservative path. We reclaim $21.50, the 20-day EMA, and enter a period of healthy consolidation. While a breakout sounds more exciting, consolidation is actually the ideal outcome. It gives the smart money time to finish loading before the next leg launches. And remember, there is one group of people absolutely terrified of Scenario 1. Short interest this past week ran between 34 and 39% of volume. Retail sentiment is at the rock bottom of the pessimism gauge, and as any seasoned investor knows, extreme pessimism plus extreme short interest equals explosive reversal potential. The bears are leaning too hard into this trade, and they are about to share a room with Morgan Stanley and BlackRock. Before I wrap up, I want to be clear about something important. Everything discussed in this video is purely for educational and informational purposes only. Nothing here constitutes financial advice, investment recommendations, or a solicitation to buy or sell any security. All investing involves risk, including the potential loss of principal. Past price predictions, even accurate ones, are not guarantees of future results. Always conduct your own due diligence and consult a licensed financial advisor before making any investment decisions. BMNR is a high-volatility, speculative asset, and position sizing and risk management are your responsibility. The verdict on BMNR is simple. This remains a classic asymmetric trade. Risk is clearly defined at $18.68. Reward is a potential multi-bagger move. Hold your spot positions. Continue accumulating in the 1950 zone. And watch the $22 level like a hawk. That is your squeeze trigger. The floor is confirmed. The institutions are loaded. The shorts are exposed. Now we just wait for the market to realize exactly what it is holding. If this analysis gave you an edge, hit that like button, drop your price target for BMNR in the comments below. And if you are not subscribed to Smart Stock Sam yet, what are you waiting for? The next setup is already loading. I will see you in the next one.